Good morning, everyone. Welcome to this update for August 7 to end what has been another pretty volatile week. But look, it's more positive than negative, which is certainly much better than it was a week or 10 days ago. So let's get stuck into it. There's the licensing information. And a reminder, this is general advice only in this service. Okay, well, I guess members are getting more focused on precious metals after 6 months of pretty hard work. So I'm going to go through some of that, also some of our existing positions and some others that are under serious research as well. So we'll start with gold, just a quick snapshot. There's gold up until last night. We had a big surge on, when was it? It was Wednesday night. And since then, it's been a bit indecisive, which I'm kind of glad of, really, because if gold had really just taken off, it then creates a bit of a dilemma. If it moves very quickly in a very short space of time, like a couple of days, then that does give us a bit of a dilemma. Because a good part of the reason that gold is moving is because of what's happening in the Middle East. So it's not as black and white as you might want it to be. And so my overwhelming message is just be a little bit careful there. Certainly start to build into gold stocks. That's justified. I don't have a problem with that, but just go somewhat easy in the initial stages until we can get better feedback, because what's happening in the Middle East is hardly set in stone and is hardly reliable. Now, of course, the other thing that's happened is that we've had quite a bit of movement in the AI tech sector, but that is anything but reliable as well at the moment, because we've got the discussion, will there be rate hikes, will there be no change, or will, in fact, the Fed actually get to a rate cut? So there's nothing that's really justifies going hard at this stage, so please resist that temptation. So that's gold. There's the US dollar, was down, and then it was back up again last night. There's the spread between gold and the S&P, so it looks like it's forming a base to me, which is good, and I'd rather some sort of short-term base formation, because it's so much easier to pick the entry points when that's what we've got. Now, there is one additional US stock. This is not a recommendation yet, because I'm still going through the research work on it, but Eldorado Gold has, I think, got something to offer that the market hasn't really recognised, and that's what I'm looking for. When times are more uncertain, I'm not going to stumble into the obvious picks, the ones that can very quickly become a crowded trades. So in gold, I'm looking for something that is maybe underappreciated by the market, and I think this one could fit the bill. And you also need a catalyst. So the catalyst here is that they've got two projects that can produce a real step change in not only gold, but also in copper, which copper got to $6.70 overnight, so it's going just brilliantly. So the market has historically treated Eldorado as a bit of a modest growth, bit of a boring gold stock, and because of the jurisdictions that they operate in, as being a bit hard to figure out, a bit complicated. So we've got Skouries in Greece. The first concentrate is expected in Q3, so very soon, and commercial production in Q4, so that's a new string to the bow for Eldorado. And they've also got McIlvenna Bay, I think that's how you pronounce it, in Canada, which they acquired, and they're entering the commissioning phase there now, and the 3-year outlook there points to significant rises in production of gold and copper. So there's certainly some catalysts there for a potential significant re-rating. And they're getting to the stage where they've spent years and years of capex on production and generating free cash flow, and that's about to start to pay off. The risk is here that they're trying to do two major ramp-ups simultaneously, and that's not an easy task, so this will certainly test management. And that's what I'm kind of weighing up, whether I want to take on board that risk. And also they've got a CEO transition underway, so good potential here, but I'm just being a little careful. But I'm looking at it because the opportunity set here is quite large. Now, we've seen some very promising moves finally in the gold royalty stocks. This is Wheaton Precious Metals, and you can see the last couple of sessions have been really good, and really good to see, even though gold didn't do anything overnight, good to see this starting to spike again. This is GROY. I know we sold it at $259, but a couple of members have written to me and asked me about this, so this is also looking promising as well. A recent addition, Vive, is doing Viva Systems. He's doing really well, and you can see he had a good night overnight. We got in at 200, and then the day after that, I think it was 205, and we closed last night at almost 218, so that's starting to trend very nicely. Copper also doing well, managed to hold its ground, a couple of big gaps here earlier in the week, held its ground last night. And this is HBM, which we sold half of, which is really annoying, but I guess we've got to do it. We've got to follow process, because consistency will stand you in really good stead. Each individual decision is not necessarily the best you can make, but if you've got a robust system and you apply it consistently, then you'll do far, far better than by any other method. I promise you that. So a bit annoying, but we'll get another opportunity. We've still got half rain. That's a good thing. And we'll get another opportunity there. Now, Brightspring had a huge decline last Friday and looked to be well and truly overdone. It wasn't on particularly large volume. We've had a little bit of a bounce, turned down a little bit last night, but it's all really low volume stuff. So I think the best thing to do here is to put a stop loss on half here at 57, and let's just let the market decide. ATI, on the other hand, in defence, had a great night, huge gap up, and came off a little bit at the end, but then the whole market did. And you can see great volume. So that's a really good outcome for ATI. Now, Celestica, as I wrote about yesterday, is raising $3 billion in new shares. It's around about 12% of their market cap. It was at a kind of an average discount of around 11-12%. Predictably, the market starts raising funds at 310, and it closed at 314.5. So it's basically come down to the capital raising price. And that means that we're probably going to have about a month or so where the share price is going to get held back while this news gets digested. But the long-term outlook for Celestica is very exciting and very probable. So whilst it's a bit unfortunate that they did that day after we got in, again, that's a short-term situation. Credo bounced very nicely last night, and there weren't a lot of stocks that finished more than a couple of percent in front, but Credo did, so that looks good, but volume very low. So the market is still undecided. AGX, something similar. The volumes are drawing up. So the market is definitely waiting for earnings season results. SMH, not much happening there. We've sold half at 490. It's bounced back to 571. In the short term, I really don't know how to pick the probable direction of semiconductors, so just being a bit cautious there. This is NU, and we obviously did really well out of that. We doubled our money a little bit, sold out in full, and I'll explain the reasons why that happened at the time. Since then, it's gone down to almost 700, and then it's started to bounce, but this is still a downtrending channel. So it needs to get up here around the 950,000 mark to be getting out of this downtrending channel. So one of the things that we're particularly trying to do at the moment, given the stresses in the system that all that leverage and forced selling cause, is as much as possible avoid the crowded trades, or we can do that pretty easily. But the hot trends, you never know when a hot trend has had enough, because it might be 6 months, it might be 2 years. So picking the time to get out of the hot trends or to reduce your exposure is not as easy as avoiding the crowded trade, because you've just got to look at social media and the chatter to know what is the hot trade. But we're trying to get out in front of the emerging fundamental shifts. That's why you're going to see more stocks that are away from where we've been predominantly hunting. And we've been predominantly hunting there because that's where the money's been. We've done really, really well out of a few stocks. But look, fundamentals are definitely not a timing tool for us. It's an organisational step. It helps organise our thinking, helps get us to the right fishing hole, but it's definitely not a timing tool. So something can look absolutely stunning on a fundamental basis and just not be the right entry at all. And there's a lot of those out there. Now, some of the other stocks that I'm looking at, Sezzle is one. They're expanding, $5.5 billion company. I'm not sure whether they ever actually listed in Australia or they just had a dual listing, but part of the buy now, pay later brigade with Afterpay started similar time. But they're starting to do very well in America. They're expanding into being a really comprehensive consumer financial platform. I've got some more work to do on this, but the chart pattern is quite promising. So that's Sezzle in one of the financial services areas. Vertiv, we sold out in full because of the way that the share price was plummeting, but it's remained on the radar. And I think there was a question in taking stock from Vanessa, I think, about do you still look at stocks that you used to be in? And the answer is yeah, absolutely. Because VRT is still a really, really strong candidate. The fact that the market reacted and kicked it down from 300 to 230 doesn't mean that there's a problem with the stock or the company. So it's very much still on the radar. So is TTMI. TTMI, we think, is advanced really well, and there's a very good opportunity in TTMI. Also, STRL in the infrastructure area. So it was doing brilliantly, got up to $1,000, we're now back to 500. The company's still going along very well. We've done a 50% retrace. We're starting to form what looks like a base. So this could be a good opportunity in STRL. Similarly, with Marvel in the tech sector. Welcome back, members. The Australian market has closed about half an hour ago, and I'll do the Australian stocks. Just before I go there, I just wanted to cover CrowdStrike. This is a stock that we're really keen on from a fundamental point of view. It just ticks so many boxes. And we've got a very high regard for this stock. We think there's a very high probability that it's going higher. The only problem is the valuation is just, in this environment, I just can't bring myself to go with it. We stayed with stocks like PME and did very well out of it when it was trading at excessive multiples, but that was a much different market to what we've got now. This market has so many uncertainties that combining that with a very high multiple just doesn't feel like the right way to go at the moment. So we'll leave that on the back burner, but it's a very, very good cybersecurity stock. Now, also, I just wanted to cover off, just putting this across STRL, which is probably as good a fundamental stock as we've got on our watch list that has been sold off and hasn't bounced back yet. So this isn't a recommendation, but we just think that there's an opportunity there. But it has been sold down fairly sharply, and we would need confirmation of a reversal on this to go with it. But I also want to make the point that largely through the fabulous efforts of Justin's research, we've got a high conviction tech portfolio, but with diversification. So we've built this tech portfolio with about 4 or 5 different layers to it to give us diversification, because this whole AI tech thing is really incredibly broad. But the key drivers that we're looking for, and with all our AI research, we're looking for a balanced combination of business quality and visible demand. And that always isn't the first focus of analysts and researchers, to get that balance. So we're looking for that. We're also looking to add some useful software diversification, and we've got some targets in that area. We've got several targets that would offer exceptional growth, hundreds of % per annum, with a pretty good probability. But again, unfortunately, those sort of stocks right at the minute have very unusually high expectations embedded in the price. So that means that they're expensive. You've really got to think about the reward for risk. But nevertheless, that's another diversification. We're also looking at stocks, and these are all different stocks, that offer very large cyclical upside with peak earnings risk. So again, these are not low-risk situations, so they won't suit all members. And then we're even going to go another layer with the neo-cloud type stocks that offer even higher risk, but just need more proof. So that is what we've got cooking in the background. There's probably 20 stocks that fit that conviction, but there are reasons at this point in time why we wouldn't necessarily go with particular ones. All right, moving on now to Australia. I've put this up against a chart of 40x, but I just want to pose the question, and again, a little bit of education and perspective. I'll just keep knocking on your door and reminding you of the things that work. Achieving the right balance for yourself. If every time the market corrects, and July, everyone knows July was just horrid, but if every time the market does what it did in July, do you feel yourself getting anxious? Do you worry? Do you feel like amending your exit rules? And if you do, that's okay. But just, again, I want to make the point that if you cash up into weakness, particularly if the weakness has gone on for a bit of time, then your overall returns over the years will be lower. There's no question. You're much better off holding high quality stocks and sit through the volatility. However, and this probably applies to a large percentage of the membership, some members just have to. They have to cash up. They just can't cope with the volatility. And to a degree, I'm one of them. I don't like that huge level of volatility without doing something, at the very least, creating some cash, because I get very frustrated if I get to the bottom of a month like July, and there are great opportunities like we're seeing left, right, and centre at the moment, and I've got no cash. It frustrates the heck out of me. It gets back to the importance of you just got to recognise who you are as an investor and play to that game. Just be thoughtful and consistent in the application of what you do. If you do that, you'll be much better off. If you're not consistent, your result will be just all over the place. So I just want everyone to be very clear that when I talk about, you're going to get a better long-term return if you don't do anything, but that's unrealistic. So it's never a matter of being resilient and stubborn and blindly committed to a process. But what is critical is that you answer that first question, who am I as an investor? What is my tolerance? So another little tap on the shoulder. All right, this is Capricorn Metals. We got into a little bit of it, or first entry at 13.27. It closed today at 15.59, so it's up more than $2. That's just from the middle of June. I set a second entry, I beg your pardon, up to $14, and that was on this day here. And I was, pretty much pitched it around about where it closed. Well, the following day, it gapped up, but that's just really taking the opportunity away from us because I don't want to chase this. I don't want to chase gold stocks. As good as they look in the last couple of days, I'm not going to chase these because this can equally come back and retest the breakout. Same with GMD. The old entries are back here. We got stopped at fully for a really nice profit. We're looking to get back in now at 660. Exactly the same thing has happened with CMM. So we've now broken out today. This looks really good. So I've just got to keep watching day by day. This is GMP. They're holding up very well, solid today. Lovisa, first entry at 25.73, closed today at 27.10. So that's moved ahead nicely. I'm now looking for a bit of a pullback. If I can get a pullback to around the 25.50 mark, that would be good. Retest of the breakout. We can grab our second portion. Now this is PLS. We've been in PLS since the 1st of June at 6.43, and the price got marked right down. Just the dynamics of the market. And put a stop loss on this because it looked pretty shaky. Anyway, I'm taking that stop loss off now and marking a second entry up to $4.70, so close to $4.58. PME, we've got a full entry now. We closed half at 209, so now we're back to a full entry. So that's formed a higher low. Telex had a very good day today. Entries at 15 and basically 15 for both halves. We closed today at 16.19 and on rising volume, so that looks particularly good. Moving on to the early stage baskets now. This is VMM. First entry was at 360, and I think about a week ago I advised that you could add additional portions if you wished. And we closed today at $4.32 and great volume the last couple of days on the breakout, so that looks very, very good. The IQ has just been pulling back a little bit. And the final chart I want to show is just XJR, which is the S&P 200 resources, and just showing you that the whole 200 resource sector has been pretty positive this week. 4 of the last 5 days have been really good. So that's the position that the market's in. Have a great weekend, and I'll be back with you next week. Cheers.